Hi everyone, welcome to the Mighty Trades channel. My name is Johar. Welcome to another episode of the Global Market Outlook. So, as you can see in front of me, we have the S&P 500 chart, and we are looking at the weekly time frame right now. And we can clearly see that the picture is not looking too great. The S&P 500 moved down by 5% last week. If we switch over to the daily chart, a majority of that fall came in the last 2 days alone. And you can see it was consolidating here for quite a while, and then that was broken 2 days back. Same story can be seen in Dow Jones as well. Was consolidating here and broke this 2 days back, and a very similar story in Nasdaq as well. Now let's switch back to the weekly charts and go back to the S&P 500. So this was a major level which we had marked a couple of weeks back, where it took support, saw a nice pullback over there, and now we are seeing that level being retested again. The same story can be seen in Dow Jones as well. This was a support that we had marked. We saw a nice pullback over here, and now it's given a closing exactly at the same level from where the pullback started, and a very similar story in Nasdaq as well. So now from what I can see is that markets look like they are going to set to move down further next week, at least the US indices will, because this picture is not really pretty over here. And the major factor behind this is going to be that the inflation came out much higher than what was expected in the US at 8.6%. Last month, the inflation in the month of April was 8.3, and now it's come back to 8.6. So now it looks like the Federal Reserve over there will have to take more drastic steps, increase the interest rates further, and suck out more liquidity from the market to ensure that demand subsides a little bit, so that these inflationary pressures continue to taper off and prices stop increasing and at least stay where they are for now instead of going up further. If we look at the US VIX also, then let's apologies, that load for a minute. Yeah, there we go. If we look at the VIX as well, then this also moved up by 11%. It had gone up all the way to 29, but it saw a cool off happening in the last couple of hours of trading. So that's a good sign that the VIX did not shoot up above 30. But let's see, it might very well do that next week or in the next 2 weeks at least. If we look at the US dollars chart, then the picture doesn't look pretty there as well. Dollar is continuing to strengthen continuously. Let it load. Apologies for that. Something wrong with my internet connection. Let's see here. Let me connect one of the network. There we go. Alright, yes. So as you can see here, dollar gave a nice strong breakout above this level again. So this level was a major resistance for dollar since 2017. It broke out from there in the month of May, corrected, came down below it, which was a good sign for us. But now, as you can see, it's again given a closing below this. That means money is being pulled from emerging markets, and the dollar is becoming stronger, and people are taking the money back to the US. Let's take a look at some other major global markets as well to understand how they have reacted. If you look at the German market, down by 4.8%, not a good sign. If you look at the UK market, down by 2.8%, again not a great sign, but still way above its support level. So that's okay. The UK market is taking it better. The French market down by 4.6%, still plenty of way for it to go down further as well. If we look at the Russian market, here we are. The Russian market is trading at rock bottom levels, at least this index is. And if we look at another index called RTSI, this index makes up of of a smaller bunch of companies, then this index is sort of going up uh, to the pre-war levels right now. So this massive fall that you see, this happened in the week when the war was announced, but obviously a lot of wealth of Russian people has been destroyed. This index has not recovered since the fall of 2008. So clearly the Russian stock market is not performing the way it should. If we look at the overall European market, the stock 600, which shows the top 600 companies listed across Europe, then that has moved down by 4% and it's trading very close to its support level. So if this is taken out, then we can see a fall till at least 400 levels very easily. Let's take a look at some Asian markets now. The Turkish market still continues to outperform everyone. It's also corrected by the least at just 2.24%. It's still at its lifetime high levels. The Taiwan market also showed a little less reaction, only 0.56% down. And this is the Nikkei 225, which is the Japan's index. This has moved up by 0.23% last week. And the Hong Kong market also gave a nice closing at 3.43% plus last week. If you look at the US crude oil, that this continues to go up higher. It moved up by 0.5% last week. Not a great sign for the rest of the world. As long as the figure keeps going up, this is going to continue increasing inflation for the rest of us. Now let's take a quick look at our own Nifty and try and understand where could things go. But before that, let's look at USD INR. And as we can see, last week the Indian rupee hit a new all-time low against the US dollar at 78 rupees. This is not at all a good sign. This shows that there is huge pressure being made on the Indian rupee and a lot of selling is being done by FIIs. A lot of money is being pulled out of the Indian equity space. And this is not good. A lot of pressures are being added on the Indian rupee. Our value is going down. That means importing goods for us is going to be more expensive. If you want to import anything in dollar, obviously our exporters are going to make better money because they will make more Indian rupees for the same amount of dollars that we are making right now. But overall, it's not good for the economy for the Indian rupee to weaken compared to the dollar. So this is not a great sign for us. Now let's take a quick look at Nifty. Nifty, as you can see, is still in this channel. It corrected by 1% last week. Most of this correction came, if we switch over to the daily chart, then it was already in a downward trajectory. We saw a very sharp pullback on Thursday, but then we opened the gap down on 10 June because of global market effects. And now it is very likely that we are going to again gap down open below this level. And in my opinion, over the next 2 weeks, I think we will retest the 16,000 or 15,800 support in Nifty. If we look at the CNX 500, similar story here. I think we are set to retest the previous support again. And if we look at the Indiavix is one positive sign where it did not move up. So in the last 4 weeks, it's been on a downtrend, but I think it's made a doji candle now over here. And I think this is going to start moving up again as the market starts falling down. Let's look at certain broader indices. If you look at the mid-cap index, it's corrected by 1.6%. It looks all ready to go and test its support level. Small cap index, similar story. It is consolidating at its bottom levels right now, and I think we can see it retest 8,500 again. If this is broken, then it will open the way down till 7,750 levels. If you look at BANKNIFTY has corrected by 1.7%. It looks all set to go probably down towards the bottom of the channel. And if you look at Nifty PSE index, which is the public sector enterprise index, this looks pretty good and in good solid shape. There's good stuff happening in public sector companies right now. If you look at the IT index, that corrected by 2.6%, and this also looks set to go back to its previous support level. If you look at the FMCG pack, then the FMCG sector also corrected by 2.5%. But this, I think, will continue consolidating in this range because FMCG is a safer sector compared to all the other sectors currently in the market. Energy still continues to consolidate here. I think that will continue happening again. It will continue to consolidate in this space itself. Nifty Finance is all set to go back to its support level. It's corrected by 3%, so finance stocks are not looking good. Infra stocks are also consolidating since the last 4 or 5 weeks in the same range, and there is this short trend line that it's making right now, but it's very possible that this could break next week. So nothing much happening in Nifty Infra. Private banks are also looking all set to go down. Auto sector is looking the strongest right now. The auto index moved up by 1% and it's up above. Let's take a look at the line chart. So if you look at the line chart, it's clearly given a weekly close above this trend line. So some good things are happening in the auto sector, and we'll take a look at the auto sector stocks to see which companies we should focus on in auto sector. If you look at PSU banks, they have also largely consolidated. Nothing major happening here. It'll fall down to this level, but I think PSU banks will continue staying in this range. I don't think PSU banks are going to fall further. Pharma is looking weak, trading at very low levels, very close to its crucial support right now. It's there only. So let's see if pharma stocks continue to stay above that. Metal sector also trading at bottom support levels. So if this is broken, then it will go down till easily at 4,800, and if that is also taken out, then the next support directly comes at 4,200. So metal is looking a little weak right now. The reality index is also weak, looking it's been consolidating since the 5 weeks in this particular range, but it's sort of going in a upward trajectory right now as per the short term. Let's see if this trajectory continues, but if this is broken, this 378 level, then we'll see more pain in the reality index coming in the future. Media index is already trading at its bottom level, so there's nothing much happening in the media sector as well. Now let's take a quick look at some sector heavyweights here, especially in the auto industry, to see who we should be focused on. So first major stock is Amara Batteries, clearly not leading the rally. Mahindra and Mahindra, superb stock. You can clearly see a cup with handle pattern here. A breakout has happened of that same cup with handle pattern, and this chart seems to be the strongest. So clearly Mahindra and Mahindra should be on our watch list. If you look at Bharat Forge, this also doesn't seem to be leading the rally, but it's definitely trading near its what do you call? Let's see here. It's within the 20% zone of its all-time high levels, so definitely much better than other auto stocks possibly. So this could be something that you can keep in your watch list, but it's not the best looking chart, I would say. If we look at Exide Industries, trading at rock bottom levels, nothing to discuss. Bosch also trading at rock bottom levels. MRF, rock bottom levels. Tata Motors looking very strong. It looks like it's made a double bottom here, and it could potentially move up from beyond this point and at least test the previous resistance of 529 over here. So Tata Motors can be kept on your watch list. Ashok Leyland. Okay, so in Ashok Leyland we had identified a head and shoulder pattern previously, and then a breakdown happened, but then a massive recovery has also happened here, which has given but it's still not given a closing above the right shoulder. If we switch over to the line chart, you can clearly see that it has not given a closing above the right shoulder yet. So let's see. It does look like a promising chart the way it looks like it's moving, but definitely you should keep it in your watch list, but let it give a much stronger closing above 140 levels, and then you can consider taking a position in Ashok Leyland. But definitely a very good structure here because it's very close to its all-time high resistance level right now, and it's not corrected like the rest of the market, right? A lot of stocks in the market have corrected by 25, 30, 35%, but this hasn't, so that's a good sign. If you look at Balkrishna Industries, then this is also trading at close to all-time high levels. It's sort of forming a symmetrical triangle. So this is a stock that can be kept in your watch list. If you look at Bajaj Auto is also very close to its all-time high level of 4,000. Very good chance it can go and retest the top of this trend line, or at least retest this level. So some short-term momentum can be seen in Bajaj Auto. EIHR Motors doesn't seem to be leading the rally, but it has not corrected as well so much. If you look at Hero MotoCorp, this is also not leading the rally as such. TI India consolidating in a range, so again not the leader in this rally. If you look at Maruti, Maruti has also been consolidating in this range. It's made a head and shoulder pattern that we had identified very early on, and it's usually consolidating in and around that right shoulder right now. And if you look at TVS Motors, this is looking really, really strong. Very clearly, we can clearly see that this is a support trend line which it has been respecting, and now it looks like it has taken out this resistance as well over here. If you draw a line chart, there we go. Now switch back to candle. Then this resistance has been clearly taken out last week, and it looks like it's all set to go and touch this previous all-time high resistance. So there can be a very nice strong rally that we can see happening in TVS Motor Co going forward. So in summary, I think markets are going to go down for the next week or the next 2 weeks at least. If we might retest our previous support level at 15,700 and 16,000. But over the next 2 weeks, I think one ray of hope that we can get from is the auto sector. So keep a close watch on that. There could be some good trades that we can initiate in the auto sector as well. But overall, the market is not looking too bullish right now. We are in for some pain. And this is going to continue, I think, for the rest of the year until inflation worries die out. And once all the central banks are done increasing interest rates, only then the calmness will return to the market. Until then, we are going to continue just keep going up and down in a similar range and going literally nowhere. So we need to start focusing more on swing trading. Once we get a good trade at the bottom levels, then we just initiate a trade, hold it for a couple of days. Once it goes up by a couple of percentage points, let's sell it off and let's try and make some money that way. So hope you enjoyed watching this video, and thank you for watching.